Yeah, very good evening, everybody. If you're in class with me, I'd like you to just type 1 in the comment section. If you're in class with me, just type 1 in the comment section. Just give me 1 in the comment section if you can see me and you can hear my voice. Type 1 in the comment section. Okay, so who can hear me, who can see me? All right, beautiful, beautiful. And we have this, yesterday we discussed Fibonacci retracement, how it can be in confluence with trend line. So far, we've been able to draw Fibonacci retracement and in conflict with support and resistance. We've been able to draw it with trend line. It can be trend line bounce, it can be trend line breakout. And that is what I wanted to that's what I wanted to pay attention to. Okay, it can be bounce and it can be breakout, because the beauty of trading is when you have confluence, and also we combine it with the reversal candlestick pattern. You've been able to see pin bar in confluence. You'll be able to see bullish or bearish engulfing. You'll be able to see piercing candle. You'll be able to see dark cloud cover. You've been able to see doji and a couple of other reversal candlestick pattern that has given us confluence with Fibonacci retracement. Fibonacci retracement is a very powerful tool. It's a global tool. It's not peculiar to me. It's not peculiar to anyone. Professional traders use it all over the world. And one of the beautiful thing about trading is that when you trade, you must trade in such a way that you have other traders all over the world in mind. Why? Because market flows in the direction of volume. Market flows, in the direction of the volume of money that is pushed into the market. So that is why when you are taking decision, you must be able to take decision that you feel many people all over the world should be seeing the same thing. The professionals, you start thinking like an institution, start thinking like a professional trader. You're able to see how how professional traders all over the world, how they will be thinking at certain different stages on your chart. And this is more reason why you should familiarize your trade. You should focus on higher time frame in your analysis. You should be focusing on higher time frame in your analysis. Professional traders don't stay on 1 minute time frame, they don't stay on 5 minute time frame. As beautiful as those time frames could be, they can only use those ones as confirmation. They don't analyze. If professional trader will not analyze his market on 5 minute time frame, he can look for his entry on 5 minute time frame. Professional trader will not analyze the market or even on 15 minute time frame. He can pick his entry on 15 minute time frame, but will never do his analysis on 15 minute time frame. And so one of these days, maybe before we end this class, I'll be taking one of the topics I'll be discussing with you before we end this training is a top-down analysis. We call it TDA, top-down analysis. How you can move from higher time frame to lower time. And I've actually taught you that before. I've mentioned it a couple of times in the course of our training. Only that I've not dedicated this, a full training to that. So we're going to be doing that subsequently. So understand that. So when you're taking entry, you'll be focusing on analysis that is conspicuous, analysis that is obvious. Like what we are teaching tonight, you'll be focusing on support and resistance that is obvious, that is conspicuous, that is very glaring, that everybody should be able to see it. And so when it's on higher time frame, majority of people will see it. So if majority of people are taking the same decision as you are taking, it means that volume market will move in your direction because people will be pushing a lot of money in that direction. And that's the beauty of it. That's the beauty of it. And so tonight, I'm just going to quickly go straight to what I want to share with you. I want to share with you tonight something about support and resistance. And somebody was asking that question yesterday in class, and I've actually touched it. I've actually um, mentioned it. For example, we have combined Fibonacci with support and resistance. We also combine trend line with support and resistance. I've already touched support and resistance, just because I've not dedicated a complete class to it doesn't mean that we have not shared it. And so tonight, let's see how we can make a theory, then come back to do practical with support and resistance. Is that okay? So let me quickly take you to my slide where we're talking about support and resistance tonight. Can you see my screen now? Can anyone see my screen? If you can see my screen, I like to just type 2 in the comment section if you can see my screen right now. All right. If you can see my screen, please type 2 in the comment section. All right, beautiful. So let's go. Let's go there. So support and resistance is very, very important. Please don't joke with support and resistance. As beautiful as trend line is, as beautiful as Fibonacci retracement level is, so beautiful is the understanding of support and resistance. Support and very, very, in fact, you see, we have two kind of support and resistance. We have the horizontal support and resistance, and we have the dynamic support and resistance, which are like Fibonacci. The Fibonacci, trend line, trend line, trend line, support, trend line, resistance. Very important. The upward trend line is actually nothing but support and resistance. An upward, so it just support rather is a diagonal support. An uptrend line is a diagonal support where we have the downward trend line is just a diagonal resistance. That period, so when price is getting to the downward trend line, it's being resisted, then it's being pulled down, then it's pulled, and then there is it's being forced downwards. It's being forced downwards, and then when it breaks out, we call it trend line breakout. And then when price is getting to an upward trend line, it's bouncing back to the upside. So the trend line is actually acting as a support. That's just it. So you need to understand the power of support and resistance. Okay. And why is support and resistance so what is a support? A buy price is so strong enough to stop the price from falling further. That means it's been supported. In those days when my coach was teaching me support and resistance, what he used to do is that you football, and then you bounce it up, you bounce it down, you bounce it up, you bounce it down. So when the ball is hitting the floor, it's telling me that is support. Support is the floor. The support is the floor where is bounced back to the upside. And then when you treat the ball to the ceiling resisted the football from going further into the upside. So it's being resisted. So the ceiling is the resistance. So support and resistance is just that the ceiling and the floor and the ceiling. the price is being supported by the floor, is being resisted by the ceiling. Period. That's just it. There's nothing more. So the ceiling is acting as a resistance. So when price get there, it's resisted downwards. And then the floor is acting as a support. When price gets there, is is not allowed to fall further. Now look at what I wrote here. Every support level or zone is a potential demand level or zone, which is also a potential demand level or zone. Don't worry, I'm going to explain that to you. This is where support and resistance becomes so beautiful, so beautiful. Support equals demand equals supply. Okay, sorry, support equals demand and also equals support again. Okay, so what it means, what therefore means, I think I wanted to write support here. What that therefore means is that, you know, support level can in the future turns to demand level, which can also in the future turns to support level. That's exactly what we're saying. The support level can actually turns to a demand level, and that same demand level can in the future turn to a support level. That's exactly what we are saying. That's exactly what we're trying to say here. So pay attention to it. Now, look at the next slide. Resistance level. A price level or zone where selling pressure is so strong and strong enough to stop the price from rising further, the resistance level. Every resistance level, okay, every resistance level is a potential demand level or zone with a potential resistance level or zone, okay? A potential demand level also. So resistance equals supply and equals demand. So the the resistance level is the supply level, and the supply level can also become a demand level in the future. That's exactly what we're trying to say there. Okay, resistance equals supply, and then which equals demand. It can also becomes demand in the future. That's what we're trying to say. Now, why support and resistance are very important. Now, you see, if you attend, if you were in my very first class, very first class, I know my slide. The slide, maybe in the very first class, you hear something like when I was saying who trade forex and why. This is when you get to understand it. Now, why do you need to pay attention to support and resistance? Number one, institutional order. Institutional orders. See, I need to understand something. This is where forex become very interesting. You need to understand that institutions don't trade the way you and I trade. They don't look at candlestick to trade. They don't look at the Fibonacci retracement level to trade. They don't look at the trend line to trade. They don't look at the anything like chart patterns. They don't look at them to trade. No, that's not what they look at. Sometimes they look at price, the price they want to buy, the price they want to sell. It is the activities, the activities of institutions that are being reflected on the charts. So we know what the institutions are doing based on candle formation. They're not necessarily looking at the 15-minute time frame as the candle closed before they enter a trade. No, they're not looking at that. They're not looking at that. So what they do, which makes trading very interesting, is that they plant their orders. They plant the orders. They plant the orders. Is a pending order. A pending order. And when the institution, maybe by a bank, a central bank, a commercial bank, day one of this class, and that's why I don't like some people joining my class when we already started the class. And I told you after the first class, I got to see my teaching is in form of syllabus and it's progressive, it's systematic, it's one level upon the other. So if you miss a level, you miss the beginning of some set of training at the beginning, it will be difficult for you to catch up. And I don't want to go back to what I thought before, I don't really have so much, I don't really have that kind of time. That's why when you don't join my class at the beginning, I don't like you joining. Even in my physical class, the moment you join my class on the day, I'll tell you, please, you can't ask questions in my class. Now, so let's look at this. On day one, I was teaching you that good trade forex and why. So we mentioned CBN, we mentioned commercial bank, we mentioned Bank of China, different kind of bank that we mentioned. You can still go back to our first class, whether first or second class. You can still go back to that class and see what we actually. I show you a chart, and I show you these are the people that put volume of money in the market. They put massive amount of money in the market. They put massive amount of money in the market. So they put massive amount of money in the market. So the institutional order. So the institution, they plant their order. They actually plant their order. And where they plant their order, at the spot you will see in the market that price quickly move away from those zone. It's a zone, it's a place in the market. When you see price quickly moving away from a particular zone, they move away fast from a particular zone. It tells you that something is happening in that zone. There are institutions in that particular price zone that are planted, whether a buy order or a sell order. Number two, market histories. That's why you need to do support and resistance. Market history. I told you in first few classes, I said history repeat itself. History has a way of repeating itself. And I told you that last time I told you to memorize that time. Number one, I told you to memorize that history repeat itself. I also taught you that you memorize that trend is my friend. So here you see that where the price reacted at a particular time, when it gets to that place again in the future, it might react. If you react the same way it reacted in the past, that is history repeating itself. Then we have the human psychology. Human psychology where some people will like, oh, this is it's going to happen here, that's going to happen here, and then the pending order of the pending orders and stop losses. This is where people usually make their people usually make their take profits at this support and resistance. So you see reaction at those zones. For example, today now we traded some market today and at certain support and resistance, you will see the reaction that were happening. Sometimes market will pull back in the stop moving in that area. Even if the momentum is strong, it will react at certain area, certain zone. Those zones are where we call the support and the resistance. Okay, and then support and resistance are price zone, not exact price line. This is another thing that you need to understand. Demand and supply. I think I better use the word demand and supply. They are price zones. They're not the exact price line. Sometimes they can act as exact price line. That happens sometimes. But then you have it at the back of your mind that supply and demand zones are zones. They are zones. You have seen me before drawing a rectangle, and this is what we're going to be doing tonight. You draw your zone. You draw your zone. So if you're watching in the future, if price is going to react the way you reacted previously on that particular zone, it's about the zone, not it's about the zone. It sits in ranges. It's about price range. And you need to pay attention to that. It's about price range. It's about price range. Okay. So which we're going to be talking about in the future. Horizontal support and resistance works on all markets. It works on all kinds of market, whether gold, whether currency pairs, whether derivatives, synthetic indices, whether stock, whether it works in that area. Why? Because psychological, that is one of the psychological levels, psychological ways where people, it also reflects how trader psychology, is played out in the market. So there is something called psychology level, which are, price run numbers. I'm going to talk about this. It's also very, very important. It's also very, very important. And then I talk about, so how to draw support and resistance. I expect that you draw support and resistance at higher time frame. Okay. from weekly. Some people even draw start from then weekly, then daily, then 4 hours. No, but then if you're a swing trader, it is good when you draw from monthly, then weekly, then daily, and the likes. Me, for a day trader, you draw your support and resistance from daily time frame, 1 hour, 4 hours, and 1 hour, and 1 hour. I'm telling you, and 1 hour. I draw my support and resistance largely on 4 hours. For now. So when I used to be a swing trader, I used to draw it on daily time frame, daily and 4 hours. But right now, I draw it on 4 hours as a swing, as a day trader on 4 hours and 1 hour. Okay, on 4 hours and 1 hour because I'm a day trader. I don't need to the I expect I stay with these three. You know, I draw my trend line on daily 4 hours and 1 hour. Daily for 1 hour. In fact, largely I use 4 hours. I use 4 hours as a day trader. But if you're a swing trader, it's better you do it from a larger time frame or from higher time frame. Then identify clear reaction points. Then you look for strong rejections, long weak, and sharp reversals. Sharp reversal is very important. All these are very, very important. When you see a strong rejection, or you see a long week, or you see a sharp reversal, at a certain point in the market, pay attention to those areas because in the future, market will come back to that level and most likely it's going to react at those areas. It's going to react at those areas. So pay attention to this information I'm sharing with you tonight. And then now we're going to get them back to another thing you look out for is connect multiple touches. Connect multiple touches. A valid level has two or more strong reactions. More touches, stronger level. The more price reacts to a zone, the more powerful the zone is. The stronger the zone is. More touches, stronger level. And when price is being held multiple times, you pay attention to that zone, and the moment it breaks, price always move very fast away from those zones. So mark those zones when you have multiple touches, and then when you have the week. So you draw your. I'm going to teach you how to draw this thing. I learned this thing many years ago. It's 2019. In 2019, all I knew to trade with was demand and supply zones. And we make stupendous profits. I've been making profit. That was all I knew that time. Support and resistance, demand and supply. All I knew. Then in conjunction with reversal candlestick, that was all I knew that time. And yes, we make stupendous money. I used to do account management. You make account management every Friday. We used to share profits. Every Friday, I share profit with the people I was managing account for. We were managing accounts as well. I remember trading for some nurses in some countries. Doctor made it for medical personnel, nurses, some two nurses in one of these African countries. So, but all I knew then was support and resistance in line, in conjunction with the reversal candlestick patterns. So let me quickly go to my chart again and let's see if we can draw one or two resistance. Tomorrow we're going to go deeper into this. Already we have spent 26 minutes in this class. We're going to go in deeper into it tomorrow. But let's see what we can do tonight. This network is all right. Can you see my screen now? This is good. This is good. I was trying to teach you something. I was trying to teach you something the other day, and I was trying to share with you how I normally switch to using lines, okay, using lines. So this is what to do. Okay, I draw my rectangle. Okay, so you draw it this way. This is how you draw it on your screen, and then you'll be looking at, for example, price was rejected here. You'll have drawn it. In those days, this is what I used to draw it. The last candle from here to here, I'll draw it and see the price reaction in the future. And then I draw it again somewhere around here. Somewhere around here. Then around here. Around here. Price, there was a reaction here, then reaction here. Then in the future, there was a reaction. Okay. And then you can also have something very small like this. Also here, and here now you can see multiple reactions in this place. Okay, so you can see price got to this place, reacted, price got to this place, reacted. And then in the future you can see price gets into that place. This looks like it's like trend line that we thought before. Okay, now see what happened the other day when gold started falling. Okay, so you can see here now when this price formed, it came down. Normally you're supposed to have drawn your lines, drawn your line here, then price came back to the same place, and then it came down again. This is history repeating itself. So what you do is you look out for where price made a quick turn. Okay, like now if you're doing something like at this place now, price make a quick turn. Price got to this place and flew to the upside. So you draw that in the future, you can see the same zone. That's why we're saying that price is not demand or supply zone. It's not an exact price. It's a zone. It is a zone. It's a zone in this area. The whole of this place is a zone. So price eventually respected it. You can see this is the first breakout. This zone is still being held, but this is the first breakout. It's still being held, and then price react back to the upside. And then you can see the same thing here. Same thing here. Price got to this place, bounced back, came there again, bounced back, and in the future, price came then again, and then went to the upside. So this one is a support. This is a resistance now that later in the future turned to support. Okay, later in the future, so this is resistance. This is a supply zone that has become a demand zone in the future. So when I say demand equals supply, this is exactly what we're talking about. Now, what was once a demand zone can eventually become a support zone in the future. And what was a supply zone can become a demand zone in the future. So that's how you draw your support and resistance. Let me see if you can come on GBP USD. GBP USD for GBP USD. So I look at it from here. I have something like this here, where you have it in multiples, where you have multiple touches. The more times the zone is being react, the zone is there's a reaction in the zone, the more powerful the zone is. Look at this now. I'm having here and here, price is reacting there. Then in the future, I can see something like this here and here. What happened here? It has come here. This is inverse head and soldier now. Head and soldier now is happening here. Then I see it here again, support. What used to be support here was support here, then became support here, then it broke out here. Then you come up again, you see something like this. See something like this. Price, there's a reaction here, and then become resistant, also became resistant here. Then later became a support, then price moved to the upside. Then you see something like this again, you come here again. Every time you see the price turning from somewhere, that price has automatically become a potential support or resistance in the future. And look at this, the price came here, and then price came back to that zone and became and formed a double top, and then reacted, and the price went down again. And then you see, going to look at something like this, you know, here, reaction, then it's being reacted to in that place. So that's how you draw it. Please understand something that I heard many years ago that changed my life. Price move from zone to zone. When the price broke this zone here, what you'll be looking at is it is coming to the next zone here. If the price breaks this next zone here, just know that it is coming to the next zone here. And if it break from this zone, just know that it is coming to the next zone. If it break this zone now, it's coming to the next zone. If it break this zone, it's coming to the next zone. Price moves from zone to zone. Price moves from zone to zone. Bear that one in mind. Never forget it. So you need to understand this is how support and resistance works. Okay, or demand and supply. I've just drawn it out for you on 4 hours time frame, and I've used gold and GBP USD to draw it out. Okay, if you're going to analyze market in the past, just look at it. Don't forget it. So I did it here. If I put it here respected, came back, respected here, and then respected here. Okay, you can see respected here, respected here, respected here, respected here, respected here. Price quickly moved away, like I told you in the slide, where price quickly moved, reacted speedily. Price moved there up, then came back to the same zone in the future, and then it's being respected also. This is how to trade. Don't forget I said price moves from zone to zone. Price moves from zone to zones. Don't ever forget that price moves from zone to zone. So all I try to achieve tonight is to begin that study on support and resistance and actually draw it in your very presence. Drawing it in your very presence where we are all watching. Then you can see it from here. You can see it from here also. So that's how to draw it. Now, it's not left to you of, okay, what should I be expecting from here? And in the subsequent classes, you can ask when you draw it, what should you expect? How do you now match it? How do you match it? How do you know whether as you look for a sell or as you look for a buy? That we're going to be discussing in the subsequent classes. I'd like to end the class here. Okay, I'd like to end the class here tonight so that we can continue tomorrow. So the assignment tonight will be draw me 10 supports and resistance, and you indicate where reaction is taking place. Reaction is taking place. Reaction is taking place here. Reaction is taking place here. So you can just give me an arrow. Is happening here. There's a reaction there. There's a reaction there. Then there's a reaction there. Okay, there's a reaction here. So when this is history repeating itself, what happened here is happening here, and it's happening here again in the future. That's what we mean by history repeat itself. History repeat itself. That's exactly what we're talking about. History repeat itself. history repeat itself. So what happened here is happening here, is happening here, is happening here. So price got to this place, resisted downwards, came to this place again. Look at how you now confirm now. You're seeing the a bearish engulfing here. You're seeing a shooting star here. You're seeing a bearish engulfing again. You're seeing a bearish. That's how to confirm. It's in that zone. You know, I told you that these are down zones. These are area of interest. Your support and resistance are your area of interest. I told you before. So when every time you see something like that, you say, "Oh, support and resistance here. I'm going to be waiting. Is there any going to be?" So, for example, if you are buying from here now, if you are buying from here, what could make you to buy from here is like something like this. Okay, something like this can make you to buy from here. If you're buying from here now, let's assume you're buying from here. When you're getting to this resistance level, you should be closing your trade because anything can happen on that zone. You should be closing your trade. Okay, so if you close your trade there, then you can also write it back down because you are seeing, is it going to form a double top? It's probably going to come down. But the moment you see this bearish reversal candlesticks, then you can say, oh, all right, I think price is going to sell. Then later in the future, you are seeing a strong bearish engulfing, and then the price is going to come down again. It's going to come down again, and then price came all the way from here to this place, and then it also reacted. Now in the same zone again, and the same zone again, I'm seeing a pin bar, very strong pin bar is happening here, very strong one. Then price move up to the upside. Then it didn't reach this plate, and it came back down. So that's how to draw the support and resistance. Very beautiful. That's how to draw your support and resistance beautifully. You can see something like this again. You can see something like this again. Did you see? It's repeating itself. So what happened here? Why did the price quickly turn here? Now these are what they call institutional zones. You see, a big institution is here. They have put a pending order, a very strong further. Then you are wondering, is coming back up. You watch it. You're watching it as the price is coming backward. So you're this place down. I'm seeing a doji here. Then a bullish candle is formed. Then again, it means the people that are pushing the price to the upside, they're already getting tired. Or the people that want to put the price downward, they're getting stronger than the people who are pushing the price upward. So you see, before you know it, price came down. Price came down. And when price the same kind of trend line breakout, you can see trend line breakout. You can see trend line is also breaking out from that same zone. You can see trend line, my three, trend line is breaking on that same zone. So that's how to trade support and resistance. Okay, that's how to do support and resistance. So I'm going to continue this class again tomorrow, where we're going to look at how are you going to use it to